Good morning, everybody, or good afternoon, depending on who somebody's out there in the internet, what live stream is tuning in from. Devon, Dylan, thank you for being guinea pigs, guests in this kind of conversation we're having today. I spent a lot of time this morning wandering around talking to folks about yesterday, and I think that the way Karen teed this up, that the intersections on longevity in yesterday's conversations about saving, want to kind of shake that up a little bit today with what I would say is a change to the focus on the function of some of the kind of things we talked about yesterday. When we at the Aspen Institute talk about the functions of wealth, one of the most important things is that wealth yields an ongoing dividend. It yields an income stream. And because the financial security program deals with all of the different kinds of challenges facing American households, but really by extent, this is happening around the world. We look at the issues specifically of older Americans, but we also look at vulnerable populations during their working lives. And as the changes of climate and the changes of AI and everything continues to disrupt and at a higher velocity, the ways that employment is disrupted, and though it coexists with longer lives, to Karen's point, it really will matter that we really start to think about how to have a different kind of conversation about beyond wages, not just in retirement, but in other parts of it. So this idea about the guarantee, I'm going to turn it over to talk, because we've had a couple of prep calls. Every one of them is completely different, just so you know, because as we've done this, we've all gone deeper and deeper into each other's worlds and fields. But I'm just going to say that if you were to go on Spotify and Google or Spotify, I don't know what's the word for Spotify, if you were to use the word Spotify like a verb and you were to look and see what shows up when you say guaranteed income, you're going to see a really schizophrenic set of podcast conversations right now. You're going to see some deep dives on annuitization from a set of podcasts I honestly didn't even know existed, but I'm now going to be following. But you'd also see that a lot of the most recent and most current conversations are about guaranteed income in terms of the kind of pilots that have been emerging in the US, really gaining momentum in and through COVID on guaranteed income as part of an anti-poverty strategy. So I guess I want to just start there, stop talking and start asking. First you, Devon, to say a little bit about what is EPIC and what you think about what is guaranteed income in your field. And then go to you, Dylan, and say a little bit about Prudential, what is guaranteed income for you? Okay.
So I lead an organization called End Poverty in California, which our mission is sort of built into the name, right? We're trying to ultimately have a state here in California that doesn't see poverty, because we have all the resources to be able to do it. We have the fourth largest economy, all the innovative tech companies, all the brightest minds, and yet we have the highest rate of poverty of any state in the country when you take into account cost of living. So there's a real disconnect, I think, between folks who are doing really well and the millions of Californians who are struggling to keep up with the rising cost of living. So we focus on a variety of policy solutions, everything from housing to criminal justice reform to providing supports for small business owners and entrepreneurs. The most critical and relevant to this conversation is trying to make our safety net more accessible and robust. And when we think about what a guaranteed income does, essentially the point of it is to provide an income floor for all people. There's a bit of a distinction between universal basic income, which is everyone, no matter how much money you make, gets a monthly check, and then guaranteed income, which is really targeted as an anti-poverty solution for folks to, whether it be through these new pilot programs or through existing social safety net programs like CalWorks, which is our TANF program, or other programs, to ensure that everyone has sufficient income to be able to meet basic needs. When we think about guaranteed income, both as exemplified through the pilots and then hopefully increasingly through the programs that already exist through our benefits programs, I think the key term that we focus on is flexibility, making sure that the money that people receive through cash aid doesn't come with strings attached. And I think, unfortunately, many of our programs whether it be the work requirements that we see through TANF or other things as well, put a lot of constraints on the way that people can use money. And I think that ultimately makes it less efficient. So when we think about guaranteed income, it's really important that one, people are getting a steady flow of income to keep themselves afloat, to also be able to save for retirement and save for a rainy day, but more critically, be able to sort of instilling trust in the ability of folks to make the best decisions in their own lives, such that they're able to ultimately maximize the money that they're given and escape poverty.
Thanks. Now tell us about your world of guaranteed income, Dylan.
So I've worked at Prudential for 28 years now. I think I missed my over-under, which was at 2.5 years, and so I'm well into that. But when we're thinking about it, it always starts with kind of private sector solutions that are taking, whether it be defined benefit, traditional pension plans, and writing contracts that honor those guarantees and provide for lifetime income in that way, or whether it's with respect to physical injury lawsuits, where rather than someone receiving simply just a lump sum, taking advantage of the tax code privileges to try to put those people that have faced harm in that way in a place where they can get structured income through their lifetime to really help to build that up, to everything that we're doing in order to try to make sure that we can bring longevity pooling back into our retirement system as the retirement system has moved from being a defined benefit-based pension-oriented system to one where defined contribution is still there, finding different ways to make the point of the retirement plan something that actually delivers income in retirement. So all of that, though, from a private sector perspective, and in a way that takes advantage from where I sit as at Prudential as an insurance company, being able to bring pooling of especially longevity risk to create better outcomes than any person could get on their own for that reason.
You know, on the face of it, it didn't take a lot of convincing, but it wasn't intuitive what your fields of work might have in common or could have to learn from each other. So I wonder if you might just share a little bit about, as you've started to learn about the work of Dylan, and Dylan, as you've started to look at the work of Devon, what strikes you as kind of, oh, there's some real through lines here?
Yeah, happy to jump in. I think as a policy advocate in the anti-poverty space, the vast majority of our policy wins after the Great Society tend to focus on children and families. So when we think about the child tax credit or the WIC programs, which focus on expecting mothers, or sort of any of the suite of things that we sort of claim as wins in the last 50 years or so, there's a real exclusion, I think, of people in the last couple of decades of their life, sort of in the post Medicare and Medicaid world. And I think sort of as people are living longer, we have a rapidly aging population in California, especially. I think maybe y'all discussed this yesterday, but I think by 2030, we're expecting 1/4 of Californians to be above the age of 60, which is twice as many as was the case back in 2010. And we have a rapidly increasing amount of seniors who are experiencing homelessness. It's actually the largest population of folks who are, largest growing cohort of folks who are homeless in California are actually senior citizens. So we have this tremendous need, I think, as policymakers to think about what are the correct solutions for providing income stabilization, income supports for people who are in the twilight of their lives. And I think we have a lot to learn from the private sector because you all have figured it out, at least for a pretty significant portion of folks. And I think as advocates, what we have to do then is think, okay, what are the lessons that we can learn from the private sector in terms of retirement annuities and the other tools that we have, plus Social Security, which we all recognize is in 2023 pretty insufficient, to be able to find solutions to actually get everyone who's in the last few decades of their life above the waterline to be able to survive. So I think there's a tremendous opportunity to learn here. Again, because y'all sort of figured it out, at least for a certain portion. And I think for us, what we have to think about is how do we get enough people throughout the course of their life, for the first 60 years of their life, to be able to develop enough assets to be able to participate in the kinds of programs that you all do and execute so well. So that's sort of how I'm thinking about it.
It's interesting when you think about the size of the challenge that we face. my reflection on this is simply that in order to get the best outcomes, that it's very likely that the solutions will need to have government, employer, and individual aspects to it, just like our retirement system when you look at that. And so for me, as someone who's been doing this for 28 years, I was taken aback by how little I really had understood about something that had guaranteed income in that. You kind of get in your day to day, you're doing this overall, and just to bring those conversations together and just to realize the deeper through line in this way. So for me, the most important reflection on this is simply that the objectives of, I think, of us all are really ones that are general: to empower folks, to make lives better, to expand access to true security, to make sure that we're all, that our financial lives are funding the real lives that we want, and to do that in a way that's equitable and that's worthy of that. And then the deeper questions that I started to have were, all right, well, where should that be private sector? Where is that the most natural kind of thing? How do we fill that space up, and how does it fit into this larger framing of what success really is?
I want to switch it to a little bit of a storytelling angle on this for a minute, in two ways. One, when we think in the world of guaranteed income, help people understand what these amounts actually are looking like, and what are the ways that income stabilization, that financial security, what's the evidence? Why is there growing momentum? And maybe you can say that either with a story, something there. And then for Dylan, I think for you, think a little bit about, most of the retirement industry conversation is about accumulating the dollars. We know the challenges of conversion, but I would love for you to indulge us and tell us a little bit about your own dad as the kind of story about what does it mean to actually experience financial security from the reliability of some amount of income.
Yeah. So I think there's really a growing consensus among policymakers and advocates, certainly folks who are more progressive, that providing direct cash aid is the best solution for poverty, right? And it sort of makes sense, right? Like, the problem with poverty is that people don't have enough money, so the solution is to give them money. And I don't say that to be glib, but I think, right, yeah, it's been around for a long time. I think even Adam Smith was talking about this. It was certainly prominent in the civil rights movement. This idea has been around for a long time. But I think it's becoming more socialized because we're seeing real examples of this being implemented in small cohorts, but with enough of a sample size in different geographies and different populations to know that it's a solution that actually works. So the first mayor-led city program for this took place in 2019 in the city of Stockton. And Mayor Michael Tubbs, who founded my organization, led the first mayor-led pilot. And it was about 125 families in low-income zip codes in Stockton who received $500 a month over 24 months. And there was a randomized control trial. They actually measured how people spent the money, what the outcomes were, and it was uniformly positive. People reported better, obviously, more stable income, obviously, better health outcomes, lower instances of anxiety and depression. People actually worked more, which was a surprising finding, which sort of makes sense when you think about it, though, because transportation to get to work is expensive, childcare is expensive, so having this bump in income actually enabled people to both seek and maintain work. And there was a great story. There was a participant named Tomas who was a day laborer, and he was never able to actually interview for a better paying job because if he went to go interview, that meant a loss of wages for the day. He was able to use his monthly check to supplement his income, and now he's working a better job, working fewer hours at higher pay, and is able to spend more time with his family. So a really good outcome there. But that story has been mimicked in hundreds of pilots around the country now. I think there are 30 mayor-led pilots in California alone. And it's also been done internationally too. And I think just this week, the state of California announced that there was going to be 2 county-run pilots funded by state dollars to focus on a cohort of foster youth in Ventura County and in San Francisco, giving them anywhere from $1,000 to $1,200 a month for 18 months. So the policies are becoming more commonplace and becoming more of a readily accessible tool in our policy toolkit. But I think more broadly, cash aid generally, whether it's in these guaranteed income pilots or through something like the child tax credit, which up until it was taken away by, frankly, congressional Republicans and Joe Manchin last year. We saw child poverty cut in half overnight, more or less, because of just giving families who were making $150,000 or less significant cash injections, and it worked really well. So the findings are very clear that, one, people use the money consistently in ways that we would view as responsible. I think there was a real concern and worry that people would spend the money on things that we would maybe not approve of, like drugs or alcohol or entertainment, whatever that might be. But people just spent the money in the ways that any of us would. They spent it on groceries and utilities and rent and school supplies for their kids. And that's been demonstrated across geographies and across different cohorts. So I think the lesson from that is that we can take the lessons that we can take from this and implement into our existing safety net programs is that we don't have to attach so many strings to the cash aid that we give people. We can trust people to make the best decisions, and actually they become easier programs to administer where we're not spending so many resources constantly checking in on people to make sure that they're doing what we think is the responsible thing to do. We can actually just focus more on benefits delivery than fraud prevention or fund misuse, which I think is certainly a feature that we see in most of our welfare programs, which is a remnant of the Gingrich era welfare reform work.
And a real growing evidence base around this work is still an active space. So as those of you, and I'm gonna leave some time for Q&A because I really want to hear some of the questions. We'll start with some of the ones that might be coming in online. But I would encourage some of those questions to be, if you're somebody from either outside of the finance world or thinking that you've been traditionally in the retirement security space, what are the kinds of questions you would ask of the guaranteed income pilots that are happening in the US? And then likewise, if you are a guaranteed income person, and maybe there's fewer tuning in this time around, but what are the kinds of questions you would ask of the annuity space? I think we can have a really robust synthesized agenda here in not too many goes here. So thank you for that. Dylan, let's move to you. Is there anything that resonates about that in terms of what's the story that helps us understand the value of focusing on income for the populations you've been serving for so long?
Well, it seems to me that the one thing that resonates is that we really have to look at success one life at a time and figuring out, we can think of large policy and how the system works, but we're going to understand whether we've been successful by what that ultimate outcome is. You mentioned before, my father was a teacher in Wisconsin, and he spent the better part of his life teaching children that didn't know how to read and bringing them to a spot where that they could read well. And that's such an empowering thing overall. I was always so proud of my dad for being able to do that. When it came time for him to retire, he worked late into his life and now is enjoying a retirement. But he was the kind of person he said, I don't know whether I can retire. It feels like it's about time. The thing that ultimately really settled for him was the ability to know how much income he was going to receive over his lifetime, and just to be able to go through and to say, all right, let's look at all of this and what is this, and this is the income that you can have. That it took away his worry. He was able to structure it and understand that he was good, he was doing something prudent, and that he would be honestly in a place that was better off than he had lived most of his life. I think that we need to be in a place where we're helping folks understand that that's the frame, that most people, the relatable way to be thinking about this is, how much income am I going to have for as long as I really need it? That's not the question that super wealthy people have to answer. It's not about the third house or the second boat. It's about how do you take whatever you have and to stretch that and to understand it. The other thing that I think that's just important is the role of money in empowering, because if you have a good sense of what that is, what we see is that folks that have a stream of income they can count on actually spend more. Because people don't generally run out of money. They worry and they cut back and they reduce their standard of living. And that's not what we want. What we want is for folks to live to their goals in their way. And I think whether it's the sources coming from guaranteed income from a public perspective, or whether it's being supplemented through private arrangements, overall, that's what people have to solve. And what we see is a single sum of money or an account value. Folks do not know what that's going to mean. When they guess about how long or what that would turn into if it were a stream of income, they generally guess wrong. When they think about how long it's going to have to last, they underestimate how long that they're going to be blessed to live. And so you have to put that all together. And to me, getting the design of the system right is about really empowering folks and trying to create a context that allows all of us to do more to help them.
Yeah. You're nodding vociferously, so jump right in with.
I think the word empowerment is so important, right? And I think what's so wonderful about cash aid is that it empowers people to make choices, right? There's a Nobel laureate economist named Amartya Sen, I'm sure people are familiar, who talks about how when we're describing like the concept of economic freedom, it's really about choice. And I think that portions of our politics sort of discuss economic freedom as with regard to deregulation, but really what we need to be focusing on is, are people in a position where they can make choices to seize on opportunities or do whatever is going to make them happy. But poverty is sort of the ultimate unfreedom when it comes to economic freedom, right? Because you're just constrained in your ability to make choices. And I think whether we're talking about state cash aid or whether it comes to the private sector, so long as we're ensuring that people aren't constrained in their options to live a life full of choice and dignity, I think we get to the right answer no matter what way we get there. And so I think there's got to be a way that we can combine both state action and private sector action to be able to get there. But I think we're right on the money when we're talking about empowering people to live a life of choice and dignity. So just resonated with me a lot.
And why I think the timing and the potential of joining the guaranteed income conversations together is because in my wonky world, the use cases of when people will need some kind of certainty so that they can make the next decisions about the next chapter of their life are going to there's going to be more of them, right? Because it's not going to be that you necessarily front load all your education, then you have the career, then you have retirement, right? We already see lots of examples in households of when you take time when you're not earning wages. You certainly have many examples, one person at a time, of what and the uncertainty of retirement looks like. But those kinds of uncertainties are very likely to happen in larger and larger chunks of time throughout a life course. So how can we start to understand the potential blended space of solutions? It's not just about reinventing a social contract. It's thinking about what is the financial product innovation that also helps us think about the times in life. As my team knows, I'm fond of saying, to your point about people might spend more, the ability of the economy to stay robust, even when there's disruption in it, has a lot to do with people's certainty that they can spend and be okay in that space. I often say it's, in terms of an economic mobility conversation, it's often really hard for somebody to swing a baseball bat when they're standing in a canoe. So how could create the possibility for stability in multiple touch points in life? You're saying that some of the guaranteed income work it's not about always having the same amount of money right now, that there's variations. And can you talk about a little bit more, I guess maybe help us start to imagine, what are some of these use cases? What are some of the examples of the times in life outside of just retirement, which is going to be a very different conversation in itself coming up? What are some of the other kinds of times in life when solutions of stable income coming in would help us weather that individually and potentially collectively, if we're talking about these kinds of transformative issues in the economy affecting many, many people?
Yeah. I mean, I think when we think about 100-year life, it's an exacerbation of the conditions that we're already seeing, right, with expanded lifespans. So you think, well, even today, people aren't having just one career, they're having multiple careers. So if someone's living longer and presumably working a little bit longer, what does that mean for how one navigates their career? Do they have to get more education and points in their life when maybe in a previous generation that would have been unthinkable? and how do we supplement the income that we sort of take for granted for someone in their 40s maybe who has to go back to school to get retrained because the economy is evolving so quickly. And then of course childcare, elder care, being in the sandwich generation as we're calling it now. There's so many places where, and maybe even places that we can't foresee right now about what's going to be disruptive for people's ability to earn income. So I think the key then is, well, we just want the most flexible set of options for people to be able to have a guaranteed form of income to be able to weather those storms. And I think what's so daunting about it is that we don't necessarily know what the challenges are going to be in a 100-year life. I think back to the 1930s when we sort of had a political coalition that came to the consensus that having millions of seniors die in abject poverty because they just couldn't earn an income at that point in their lives, that was deemed unacceptable. So we passed Social Security. But at that time, the life expectancy was like 60 years. The idea of having that be the only or at least the most commonly cited form of guaranteed income essentially for older folks didn't envision people living to be 100. So I think now in 2023 moving forward, when we're hopefully going to see more common people live to be a full century, which I think would be amazing, long way to go I think in terms of addressing the inequities that we have to get there. I keep coming back to this concept of flexibility because I think we can have a suite of instruments that allow us to get people the income that they need. But if we're not allowing ourselves the space to be able to adjust to changing times and sort of adjusting to the uncertainty of what's going to be needed from policymakers moving forward, I think we're sort of setting ourselves up to fail if we don't embed that into the actual policy design. So I just think being prescriptive is probably going to be our downfall, especially when it seems like we're always 20 years behind in trying to deal with, have the right policy solution for the thing that's coming down the corner.
Mm-hmm. So how have you seen, or do you think often about additional ways that the kinds of solutions you've been able to come up with could be helpful as potentially at different phases in life of different pieces?
To me, I think it's important that we look at and say our ultimate goal is to provide that flexibility that people need. But in order to do that, we're going to have to look at first principles and say, what really are the trade-offs and what's the design of this system? And I think in some ways to have a deeper conversation about that. And this is at a time when having substantive, deeper conversations has become harder because sometimes people will stake out positions and not just say, okay, what is it that we all agree on? And then what are the tools to be able to do that? Most of this, when it comes right down to it, it's math. And the question is, how do you bring that math together? How can you create a retirement system that has the right positive defaults that put people onto what for most folks is the right design, and then have the ability for people to opt out of that in just one thing. And again, I spend a fair amount of time thinking about the retirement systems that we've got. And I think our single biggest failure is the idea that we have moved from retirement systems that just automatically thought about and delivered lifetime income to ones where you get an account balance and a lot of worry about how do I actually convert that into what I really need back. And so finding ways to make sure that the political conversation says, how do we take the best of structured income and those thoughts, combine this with the best of the ideas that want people to be part of the system, and say, how do we find that middle so we can say this is really the country we want to have together, and then we can say, and here's kind of the roles where we can maximize that.
Just add one more thing on that. I think something you said that I want to pull out that I think is really important is, how do we ensure everyone's in the system, right? Like, how do we ensure that everyone has a shared stake in the broader, like, national or state, in our case, prosperity? And my hope is that by providing an income for folks at every stage of their life, it makes it easier to enter that system in the first place. And I think, you might have stats on this, I don't know, but I would imagine for many folks, there's a significant barrier to entry to even access the tools that are going to be the most effective for establishing long-term income for themselves in the first place. And I think that's sort of where I think the private sector and the public sector can come together to try to both lower the barrier to entry, but also boost people up to be able to clear that hurdle in the first place.
And, my own thinking evolving in what, conversation 3 or 4, but, again, what are the longer, the deeper conversations? We're certainly planting some seeds for those here and now. I think that these questions are happening in many, many countries in the context of longevity. I know one time, Karen, we hosted, I remember in Vancouver, a conversation around just many countries are facing the problem of a defined contribution plan where we've succeeded in an accumulation strategy and everybody's struggling with how to convert that to security. It's kind of like making that an income stream. Similarly, many countries have been experimenting with cash and are facing kind of pressure on the future of welfare states as they exist in places like Europe. But here in the US, how do we convert from pilots to actual policy? And there is no permanent pay for in this conversation. There's a whole next generation of conversation that we need to grapple with around financing the future of income for populations in retirement and in many other life transitions. So that's really where I think you're hearing first our desire to start to see how we can spark new ideas and new alignment in really being quite creative about who we start to see as working on the same problem, even though maybe before this we didn't see that. I would love to, we've got about 9 minutes left, and I'd love to know if there's either questions coming in from online or if there's a couple of questions in the audience. And please identify yourself and we'll take some questions. Calls.
Conversation. There we go. Yes, the online audience has questions. They're curious about sort of the relationship between living wage policies and minimum wage. Is this something that can, replace minimum wage, which may no longer be enough? Do they need to work together? And then probably perhaps separately, but also with guaranteed income, does it lead to an increase in discretionary income that might allow people more emergency saving and retirement savings?
I think the second one's easier, yes, right? But it also, I think it's very challenging to save for retirement, right? If you are struggling to meet needs today. So in an ideal world, we're not talking about a guaranteed income as a wage replacement, right? And I think we have enough data to understand that, again, people actually work more when they have a little bit of a bump from government funding. So the idea is, we want people to be able to save in the long term. But I just sort of jump onto some of the things that you were posing for the next conversation. I think, how do we do this at scale sort of answers this question as well, which is it's not enough to just keep doing pilots. We want to be able to do this more broadly, but there's a big question about what the pay for is, because these are not cheap by any means. But I think there are lessons that we can learn from these programs that we can instill in our existing benefits programs. So when we talk about a program like TANF that is rife with work requirements, TANF is Temporary Aid for Needy Families. It's one of our biggest programs in the country. It's rife with work requirements and hoops that people have to jump through, constant recertification requirements. And like many programs, not just TANF, but others as well, you make a little bit too much money and then you're off the program entirely. There's not often a sunset period, which really doesn't make any sense if our goal is for people to be able to give themselves a solid economic footing. So if we eliminate things like what we call the benefits cliff, you make $1 more and then you lose the benefit entirely. Actually, it makes more sense to structure these programs to allow people to have a bit of a wind down so they can save a bit more money and then, to be able to have some discretionary income as well. So I think the lessons that we learn from guaranteed income can actually be quite useful for making our existing benefits programs achieve the things that the commenter is talking about.
Anything you want to add there? Okay. And on the first question, I would say just to reiterate, I think the conversations about wage and guaranteed income are complements, not substitutes,
yeah, absolutely.
in the ways that we've been talking about it. Anybody in the audience? Yes, over here. There might be. Please introduce yourself.
Oh, Adrienne Berg, the Ages Traveler and UN Rep from International Federation on Aging. So this is a perfect entry point. When you have Social Security, the moment you opt in for Social Security, or you buy an annuity and you begin to annuitize, or you get your cash payments. It seems to me that there's this moment in time that if we could have a coalition that would see what else you do for that person at that moment. You're giving them the money and they are paying attention. And we talked about people not paying attention yesterday. So they're paying attention, and here's a perfect place to do health, work training, volunteer training, life purpose training, everything that we've been talking about holistically. Is there any thought to go what I'll call beyond the money? I know, because I have been in the private sector and the annuity sector, there isn't. There's a lot of talk about it, that they're going to do lifestyle consulting, but they're financial advisors. They're not lifestyle coaches. I'm just wondering if this is part of the conversation, or is it still all about how do we get an amount of money affordably to people in the right way?
Let's hold this one and have a couple of others come in. We can batch them into an answer. And I'll just say in the starting point there too, if there isn't research there, there's been a lot of research in the world that Devon and I come to around how many things can you co-locate on a conversation about tax time. So I think there would be, again, another time where you're looking at those key points when people are paying attention around money. We may be able to learn some things across there as well. Question back here. Hello.
I've got a question for Dylan.
Can you introduce yourself?
Sure, Richard Eisenberg. Hi, I'm a journalist. The numbers I've seen show that I think only about 14% of Americans have ever bought an annuity, and I think only about 10% of 401k plans offer the ability to have an annuity from your 401k. So if people like the idea of retirement income for life, why are so few people buying them and so few employers offering them?
Great. And is there any final question? And we'll take all three of these. We've got one about the choice point. Yes. Thank you.
Hi there, Camille Khan. One of the things, sorry, I'm just giving you the UK experience. I think when we move from a defined benefit to a defined contribution scheme, what you actually moved away from is a fixed retirement income, as you alluded to a return on investment type structure, where you required the person to deal with a financial advisor. I just found that, people dealing with financial advisor had no idea as to what they should deal with. So involving clients with financial management was a very bad move and created loads of litigation. What strikes me is going back to the traditional idea of paying pensions from tax, which we have for teachers and police. So for example, if you had a notional defined benefit scheme where you took 18% of your income in some way on a pay-as-you-go basis, which then guaranteed you a defined pension at a certain point, and that gave you the safety net. Because this idea of then giving your whole structure to someone who gives you advice has 18 to 22 types of fees in it. There's even a fee for inactivity if you don't contribute. And it has been a disaster in the United Kingdom. So what you need to do is to go back to a very simple structure, as you alluded to before, as we have in Europe, which is paying a pension from tax, full stop. Get rid of all the financial advisors. Get rid of all those private
I'm not
equity
hearing a
people.
question, but I am.
Get rid of all the private equity people.
So let me turn, thank you so much, all of you, and also online. Let me turn this around to giving you all the opportunity for a final comment. Either on, we talked about this as the solution we're trying to learn from, but at the moment, there's potentially a smaller market in annuities than one would expect, given the conversation we're having. There is, of course, other examples of how to make it more widespread for retirement in predictable and efficient ways. And then all of this comes back to, and for you, what is the opportunities to learn from that? So I'll leave that with you all. Really, any kind of final comment you want to say, and thank you all for indulging us in this kind of a start point conversation.
Maybe I'll start and then you can close up.
Sounds good.
So let me come back to the try to wrap a couple of these things together. When you think about the amount of annuitization that happens today, I think it is a fair observation as you look across this. the question is why, if you're looking at upwards of 80% of Americans would say lifetime income is something I want. What are the structural barriers to this? It's in the design of the retirement system now, where we have not well integrated the right frame into defined contribution. It's account values based. The idea that on any given day, you're going to say, okay, is this the day to turn this into income? How would I do that? How do I know I'm doing it right? What's the right product? There's just way too much complication in that. I believe, as a matter of public policy, just my opinion, that we'll continue to want to use the three-legged stool, government, employer-based, individual-based overall, but that the design of the system has to get better, has to focus better on the outcomes, and to make it easier for people to make sense of that. If we do that, we will have helped the system out overall. And we need to make sure that there's an ability for folks to provide the right kind of education so that people can understand it. And within the private sector, we need to make sure that we're doing every single thing that we can to keep costs as low as they can through good system design, so that the most benefit can come through to the customer. I see that the time is up, so I'm gonna just...
Yeah, and I'll be brief, I promise. I think what I want to leave everyone with is, so many of the reasons why direct cash aid has been challenging to implement is because I think collectively as a society, we have a very deep distrust of people, especially people living in poverty, where we don't believe that if we give people money that they're going to use it in a way that any of us would. And I would challenge everyone to sort of reflect on why we're so wed to those ideas, even in the face of countless examples and data that shows that that's an unfounded assumption. And I think that if we are able to overcome those harmful narratives, we can actually advance cash and guaranteed income, whether it manifests in sort of just a straight up check or in the principles in our existing safety net programs, as a means that, as a way that we can move forward to having an economy where everyone has a stake in both the prosperity of the state, but also a future that is going to allow them to retire with dignity.
Thank you both so very much.